be showing you guys tonight one of the biggest things that have been my own personal secret, all right, or let me say the secret to my own success in the financial markets. All right, I think I've been around for a little bit over a decade, and in all of these experiences that I have gathered, okay, I've been able to, I can boldly say that I have reached a level of persistent consistency. All right. There are certain things that cannot happen to me anymore in the Forex market. Okay. So tonight's session is dedicated to all the newbie traders, or as many people as still have one thing or the other that they are struggling with in their trading journey. All right. So that's what this webinar is going to be about. Okay. Now, I decided that even though I have a whole lot of things that I would love to teach you guys, okay, nonetheless, I would like to first of all know how can I help you guys. Okay. I know that, oh yeah, sessions like this, people come around and they just want to see, oh yeah, what's up? What's the new thing that this person is teaching? All right. But we are going to do that towards the end of this webinar. All right. However, first of all, I want to get to know you guys. All right. I want to get to understand what your challenges are. Okay. I want to get to know what your challenges are, what exactly it is that you're struggling with. So if you would like to, comment on that, all right, tell me what your current experience has been. All right. I'm just going to open the floor for 2-3 people to communicate their pains. All right. And then once we're done with that, we can easily scale from there. Is that okay? All right. If that's okay, so please, if you'd like to speak, just tap on the mic button on your chat, on your Telegram app. All right. And then I am going to allow you to speak. I'm going to unmute you from here. All right. And then from there, we can push further. All right. Skittles, please unmute your mic and go ahead with your inquiry. Hello, Skittles. Hello. All right. It seems that was an error. All right. If you're here and you want to just make a comment, all right, tell me what exactly it is that you're struggling with in your trading journey. All right, and then we can resolve all of that before I even go into what I have for you guys tonight. So please unmute your mics, or just tap on the speak button. I'm going to allow you to unmute your mic from here. All right, and then get to hear what you have to say. Okay, I'm waiting. Please just tap on the speak button. All right, good. Reynard, please unmute your mic and let's hear you.
Please, good evening.
Good evening.
Please, I wanted to ask that as a swing trader with supply and demand, can you get a good setup maybe on the 4-hour and come to like 15 minutes to come into your entry? And how do you do it?
All right. Thank you very much for that question, Reynard. Actually, that is a concept that is described as top-down analysis. Okay. I am going to show you. I'm going to talk about that. All right. Before we end today's webinar, I'm going to talk about that because what I'm going to be sharing with you is also along that line. Okay. Today, I'm going to be teaching you guys how to trade with a daily bias in mind. All right, I'm going to be showing you how to trade with a daily bias in mind. So that's what we're going to be looking at today. Okay, but nonetheless, we're just going to run through top-down analysis as well. So who else has a question? Your question has been noted, Reynard. I just want 2 or maybe 3 more comments. All right, and then we can take all of them together. All right, Skittles, please unmute your mic and make your comments. Hello, Skittles, we can't hear you. Skittles, I can't hear you. Please unmute your
Can,
mic or please speak. All right, I can hear you now.
can you hear me? Yeah, what I want to talk about is like basically like how to manage drawdowns.
Okay, how to manage drawdowns. Okay,
Yeah.
so how do you currently trade? Is it that you don't trade with a stop loss, or what exactly is the reason why you want to know how to manage drawdowns? Is it that you often
Like
find yourself in heavy drawdown situations, or what exactly is the issue?
how would I put it? Like, okay, let's say trying to place a trade with how would I put it? Okay, trying to place a trade, let's say with 0.5 of like let's say 0.5% of my
Okay.
capital. So let's say the trade went in loss, then I tried again and that one went in loss as well. That's like the loss is would I say accumulating. So
Yeah.
let's say I had 3 straight losing streak, or let's say 4 losing streaks. Like how to actually like maneuver your way out of those drawdown, because now I have like a $5,000 account. I have a $5,000 account now, and okay, I traded with okay, I traded and I made a loss first time, I made a loss second time. Definitely the account balance would have like reduced. So is there a way like to manage those kind of drawdowns then still bounce back to balance the drawdowns?
All right. Beautiful question, Skittles. I'm going to also address that. I will definitely address that. So, Dar, please unmute your mic and let's hear you.
Good evening, guys. Good evening, sir.
Good evening.
So yeah, I actually started trading late last year, June. So I've actually noticed some things, mistakes I do. Following the journal guideline, I've actually joined some of your spaces, your YouTube and live with Dr. Bills. So I want to say a big thank you first, and I appreciate you guys. So I'm still having a issue, or I'm having some issues trading, like noticing a very valid order block, even using Fibonacci level most of the times, locating a very strong order block. And I have another question. Sorry, hope I'm not taking your time.
No. Just go ahead.
Okay. If how can someone manage a small account, a very very small
Small
account?
account.
Yes.
Like how small?
Like how?
Like $10.
Yes, $10. Let's say minimum $10.
Okay. All right. Beautiful. Thank you for that question, Dar. We're going to take all of these questions. Trust me, we're going to take all of these questions. So, what we're going to do, the first question was talking about, top-down analysis. Okay. The second question was talking about minimizing drawdowns. Okay. The third question we've had right now is also talking along that line, managing small accounts. All right, and figuring out solid order blocks. Now, this is more like a therapy session. Okay, this is more like a therapy session. When we have addressed all of the situations, okay, then I am going to bring you guys into what I want to teach you for tonight. All right, we have the next, I think the next 53 minutes together. All right, so there's no need to rush. Okay, so please pay good attention. This is going to be worth every single minute you spend on this call. All right, I can promise you that it's going to be worth every single minute you spend on this call. The last 3-4 months have been crazy for me. All right, and I have had so many amazing sessions, with some of my private clients that I just felt like it would be unfair if I don't give back to my online community. All right, so I had to even cancel some meetings to be here tonight. So, having said that, please and please and please take this as a serious opportunity to learn strategic things for your growth. All right. So, having said that, Ahmad Musa, please unmute your mic. Let's hear you.
Good evening, sir.
Yes. Good evening, my friend.
Okay, my question is about swing trading.
Okay.
Sometimes I'll place a trade, it will go my way. If I catch some pips, I will break even. So, and also will come the trade will come and hit my SL before going my initial direction. I don't know why. Oh.
All right. So, Ahmad, your question is about break even. When should I break even? All right. That's actually
Yeah.
what you're asking. Because I have been placing trades. You have been having situations where price would eat my break even or my stop loss and then go back into profit, right? That's your question.
Yes.
All right. Ahmad, that question will also be addressed. Sophie, my very beautiful friend, please unmute your mic and let me hear you.
Good evening, sir. Thank you so much for
Good evening.
listening us. So I wanted to ask,
Yeah. Okay.
we did so-called the change of character and other times, but you AUDCHF ended up going down. So I wanted to know why. Because like it already did the change of character. I was expecting it to go to make a buy, but it did not do that.
All right. So your own question is about AUDCHF, right?
No, about change of character generally.
Change of character generally with the exact with the case study of AUDCHF, right?
Yes, sir.
All right, beautiful. So because of the nature of Sophie's question, all right, I am going to be looking into Sophie's question first of all right, because of the nature of our question. Now, this is AUDCHF on the daily time frame. Sophie, can you tell me on what time frame you saw the change of character? Because I'm not sure I can remember right now. But what time frame was that?
5 minutes, because I was checking out the chart. It was on 5 minutes. 5 or 15, you know.
5 minutes.
5 minutes or 15, sir.
All right, you said 5 minutes, right? 5 or 15. Okay, good.
Yes.
Good. Now, thank you for that. So, Sophie, let me explain something to you. All right. One of the safest ways to trade a change of character. All right. Okay. Yeah, this was the analysis. Let me go to the 15 minutes now. So, on the 15 minutes, we want to look at the change of character that we got. Now, if you look here, all right, if you look at the situation here, this was the change of character and it was very clear. Okay, now you're going to begin to understand one of the reasons why I always recommend using the Fibonacci. All right, so using the Fibonacci, this is the total move. All right, this is the 88.2. All right, and one thing I have always told all my students is that the first take profits that we use when it comes to the Fibonacci, all right, is the 23.6. All right, the 23.6. And what do you notice? Price actually got to the 23.6. Now, I was expecting price to get to the TP5, which was all the way up here. This is 1, 2, 3, 4, 5. All right, and that was my expectation. But nonetheless, price actually got to our first take profit, which was this here, 23.6. So do you see that now, Sophie? You can just type it as a comment in the Telegram group. All right. So that was exactly what happened here. Okay. And then immediately after this happened, price hit at TP1. All right. We got a continuation of the downtrend from the daily time frame. Okay. So that was exactly what happened here. Okay. So I'm going to be allowing one last person, all right, to make a comment. And immediately after that, we'll take all the questions or all the comments. We'll take them all together. All right. And then we'll swing. Someone was asking about swing trading. Yes, we're going to talk about that also. All right. At what point should you start talking about swing trading, and all of these other kind of things. So one last person that is going to give a comment, tell us what your current challenge is. All right. We're going to fix that together, or at least attempt to address that here right now. Okay. So let's go. Who's going to be that final person? All right, Mr. Temitokwe. All right, Oshatokwe, please go ahead and unmute your mic. Let's hear you.
Yeah, good evening, everyone. Good evening. Good evening, sir. So I wanted to
Good evening, sir.
ask, is there a way, okay, for example, after doing like a very thorough analysis, and then I know for a fact that I've been able to identify the direction of the market on a larger time frame. How do
Okay.
I then manage a trade in that direction? Perhaps let's say I enter a trade and then it starts to now go against me at some point while I'm already on the trade. How do I know whether it's still safe to stay in the trade or whether to exit? Because there are some times when because you are confident about direction, then you enter a trade and then it starts to reverse against you. How do you know that a movement is not a reversal as opposed to a retracement?
Okay. All right. Beautiful question there. Beautiful question there, Mr. Tim Tokwe. So, guys, welcome once again to tonight's session. Okay. I am going to be quite concise in my responses because what I'm going to be showing you tonight is something that is okay. Mr. Tokwe, you want to still speak? If you still have a comment, you can quickly give that before we go into the answers for all of these questions. All right, I think that's not the case. Okay, so we're going to take all of these questions all together, all right? And then I'm going to be showing you my own answers to each one of these questions. So I'm going to be starting with one of the most constant questions, or one of the most common or most popular questions that people have asked me in the last 5 years of, training people and helping people become profitable traders. And that is the question of, at what point do I break even? All right. What is that thing that should be my consideration, all right, before I take a break-even position? All right. So say, for example, this was the situation that I had seen. All right. And then I've taken my trade. I've taken my trade from, hold on, please. And then I've taken my trade from here. All right. From this point. Okay. So the question now is, at what point do I now start moving my stop loss? All right. At what point do I modify my stop loss to break even? That answer is this. You are not expected to move your stop loss until you are certain, all right, that the direction is valid. Okay. You are not expected to move your stop loss until you are assured, all right, or you've seen durable signs, all right, that the direction you predicted is the actual direction that price intends to go. Okay. So what do I do in this situation? For me, all right, I usually don't move my stop loss because, like you guys know, I trade using the Fibonacci, all right, and I don't usually move my stop loss until one. There are 3 ways I do it. All right. So option 1, price hits my TP1. Right? That is the simplest one. Okay. Option 2, price creates new internal structures. All right. So sorry, guys. I had a very important call that I needed to attend to. Sincere apologies. Pardon me, please. Pardon me. Okay, so the second one is when price creates a new internal structure. All right, so that also validates that it's time for me to, to move my stop loss. Okay. Then the final thing that that indicates or that signifies that it's actually time for me to, move my stop loss or to break even is the fact that, I all right, at the point where I take partial profit. Okay. Now, what do I mean by taking partial profit? Remember, those of you who understand the concept behind my main course, all right, you'd understand that the way the main course works is that it's designed, or it's structured in a way that it enables you take multiple trades, all right, and not just multiple trades, but at the same time, it enables you have different criteria for exiting trades, all right. So you can have partial take profits maybe at 3-4 points, all right. So that is the third criteria for taking partial for moving your stop loss, all right, or applying break even. Okay. Now, if you understand this, please comment on the last post, all right, the last post in the Telegram channel. All right, just drop a comment. Let me know that you understood that. Okay, so we're going to go into the very next one. So we've started with, how do I know when it is time to break even? All right, and that's one of the simplest questions that I've had to address. Okay, but the next question is a bit technical. All right, it's interesting, but it's technical. And that was the question of, all right, so I'm a swing trader. Okay, how exactly do I identify solid order blocks? Sorry. So the question is, how do I recognize order blocks that are valid? Okay, so that I can trade from them. Now, one thing I have always said to my students, especially those in the VIP mentorship and those who were part of my last mentorship batch, all right, is the fact that whatever trades you're going to take, okay, no matter how much you trust that other block, all right, no matter how much you trust the other block, you still need to have what we call an entry criteria, all right, or your entry reason. Why is that important, or why is that the case? Because you need to understand that order blocks are simply areas of demand and supply. All right, that's what order blocks are. Right, they are areas of demand and supply. And because they are areas of demand and supply, there is no 100% guarantee that an area of demand and supply is going to work out. Okay, it is not an 100% guaranteed scenario. Okay, so it's important for you to have what we call an entry criteria. Okay, and that's why for those in my mentorship, and even for those of you on the Signals group who, you've been with us since last week, all right, you testify about the fact that I always mark out the order blocks and yet tell you what to look for on the lower time frames. All right, such that if this is a setup on the 4 hours time frame, I am not going to be entering that trade on the 4 hours, all right, because I'm going to be looking for something along this line, all right, on maybe the 15 minutes or whatever time frame that suits me best. All right. So if I don't spot this on the lower time frames, I am going to consider that order block invalid. All right. And then I'm just going to move on to the next one. Okay. Another important factor to consider before, that happens to strengthen order blocks is that you need to look for an area of demand and supply that caused a break in structure. All right. Your area of demand and supply must, as a matter of necessity, all right, it must cause or it must lead to a break of structure. And as you can see, this, our demand order block, actually caused price to break structure here, all right, a bullish break of structure. Okay, and that is option 2, or that's the second factor. The third factor to also consider is that before price comes back into your order block, all right, there must have been some form of internal structure. all right, price must create internal structure before it gets to your order block. All right. That is really, really expedient. All right. Because if the price is just coming all the way straight down, bam, all right, and it steps into your order block there's most likely going to be issues. All right. Like what we had in this situation. Let's go to the daily time frame so I can show you that quickly. You see that on the daily time frame in this situation, all right, the internal structure failed, all right, from here till price got to the other block. There was absolutely no internal structure on the daily time frame, all right, and that was why when price reacted here, all right, from inside this other block, the best thing that the reaction could do was to simply create internal structure, and then price just continued in its intended direction. All right, do you get it now? So beyond being theoretically correct or finding out which other block is the best, you need to have an entry criteria. All right, you need to have an entry reason. Okay, so it's like it's not enough to know what is the best food to eat. All right, you also need to eat it at an appropriate time. For example, people, if you're a Nigerian or an African, all right, you would understand that when it comes to beans, all right, when it comes to eating beans is a really lovely food. All right, I have friends who consider beans to be their favorite, right, their favorite meal, all right, or their favorite dish. However, what do you think would happen to a person who decides to eat beans, all right, on a cup of, or over a cup of warm milk? All right, so this guy is drinking warm milk, all right, and then is eating beans rather, and then stepping it down with warm milk. What do you think is going to be the outcome of such enjoyment or of such flexing? What do you think will happen to that guy? I want to see your comments in the signals group. What do you think would happen to this guy who at this point is eating hot beans, all right, and stepping it down with very warm milk, all right? Probably even condensed milk, it's just what Yoruba people call milk your lokbe, all right? So this guy is just chilling and enjoying himself and just chopping life. All right, beautiful. These are people that understand. It's going to have running stomach, all right, and that guy is going to stool several times that day, all right? He's going to run stool several times that day. He's going to have to visit the toilet so many times. Is it because drinking milk is bad? No. Is it because eating beans is bad? No. It is simply because the combination, all right, that combo does not work. All right, so the same way, you already have the order block, all right, but you need to look for the perfect combo that goes with it, all right, which in this case is your entry criteria, all right? Is that okay, guys? All right, beautiful. So let's go on. So we're also going to be answering that question regarding, all right, so what exactly is supposed to be the ideology behind top-down analysis? All right, it's a question that I get a lot as well. Okay, so what exactly is top-down analysis? How does it work? Okay, so let's quickly look into top-down analysis. All right, permit me to wipe off all of these drawings. All right, so let me use this example or this illustration, okay? So say, for example, let's say, for example, this is where you live, all right? Maybe you're living in maybe Ibadan, or maybe you're living in, probably Ondo State, all right, Akure in Ondo State. And this is Abuja, or let me say this is Lagos, all right? You're trying to get to Lagos, okay? But, the train that is going to take you, all right, the train that you're going to have to board is a train that is actually coming from let's say it's coming from Kaduna, all right? Let's say it's coming from Kaduna all the way to Lagos, all right? Now, this is my question. Are you going to take a cab, all right, or a bus to Kaduna, all right, so that you can board this this train, all right, and arrive at Lagos? Is that what you're going to do? Is that what you're going to do? This is Kaduna, all right, this is Kaduna, all right, this is Lagos, all right, that's Lagos. So you're trying to get from Akure to Lagos. So the question now is, are you going to first of all take a cab or a bus to Kaduna so that you can join the train that is taking you all the way to Lagos? Or what do you think you would do? What would you do? What would you do? Because if that was a question for me, all right, what I would simply do would be to simply look for the train station that is located in my vicinity. All right, I'm simply going to look for the nearest train station to me. So there should be a terminal right there in Ondo State, all right, where I can simply join that train. Okay, where I can simply follow. Now, the overall picture is that this is a train going from Kaduna to Lagos. That is the overall picture on the higher time frame, on the daily time frame. All right. But the lower time frame is what will help me see that there is a terminal close to me, all right, where I can simply get in and join that train that is going from Kaduna to Lagos without having to travel to Kaduna to join them. Is that illustration clear? Do you guys get that illustration, please? Hello? All right. Thank you. Thank you. I'm glad to see that you guys got that illustration. So this is how top-down analysis works, all right? So what top-down analysis does for us is that top-down analysis helps us identify the nearest terminal where we can join the overall direction on the higher time frame. Okay? So on the higher time frame, if I figure out that this is the direction that price is going, all right, I can go to the lower time frame and look for the nearest bus stop, all right, that is within my reach, where I can simply join that train from. Okay, so that is that's the concept that top-down analysis represents. Okay, so we're going to go into detail in the on this, all right, but we may not be doing that much of a detail here tonight. All right, we might not be doing that much of a detail here tonight, but nonetheless, let's go further. All right, let's go further. Now that I have answered that question, so what do I do practically on the chart, all right, in order to be able to figure out what next? So what I do is when I identify the trend on the daily time frame, that's why I said that what we're going to be doing tonight is daily bias, all right? I'm going to be teaching you guys how to work with a daily bias, all right? That's simply the target or the focus for tonight's session, all right? Working with a daily bias, all right? Because in the last couple of weeks, all right, in fact, if you check all of the analysis that I have dropped for FBS so far, even on their website, right? At least some of my most recent analysis. All right, if you read through them, you discover that there have been at least 90% accuracy on those setups. All right, a minimum of 90% accuracy. So if somebody tells you, "Oh, consistency is not possible, accuracy is not possible," just tell them to shut up. All right, it simply means they don't know what they are talking about. All right, these are some of my most recent articles. You can go read them up at your own convenience. All right, you see, in fact, all of these are articles from the last week of March. All right, this is from March. Yeah, this is from March. All right, so there's a lot of results that I am getting, or that makes me know that you guys can get the same kind of results. All right, with a little bit of work, hard work, all right, and patience, you guys can get those kind of results too. So that's why I'm going to be teaching you daily bias tonight. All right. So I want you guys to just drop an emoji. Once I get 5 emojis in the chat box, all right, I'm going to kickstart the daily bias session. So yeah. Keep it coming. 1, 2, 3, 4, 5. All right, beautiful. So let's get into daily bias. Now, I'm going to be showing you 2 ways to approach daily bias. All right. I'm going to show you the easy way and show you the hard way. All right, the difficult way. However, as far as the easy way is concerned, I am going to mention it briefly. I'm not going to show you in detail. All right, but I'm going to show you the hard way in detail, very, very much detail to the core. All right, so let us start with the difficult way, all right, or the hard way. The first looking for when it comes to the hard way is looking for a candle that has high volume, all right, or very high impulse. Let me use AUD. Joshua, you'll be allowed to speak, but not just yet. All right, so please hold on. All right, beautiful. So what you want to do is on the daily time frame, all right, you want to identify a candle that has very high impulse. All right. Yeah. Let me just say, yeah, big body, very small retracement. This is one of the most painful trades I have ever taken in my life. I closed out at 1:13 when I should have closed out at a very convenient 1:36. All right. But like we know, things like that happen. It's the market. Nobody controls it. So this is the daily time frame. All right. That's the big body candle. All right, that happened more like a breakout. So what do I want to look for? I want to go to the 1 hour or maybe even the 15 minutes. That question on minimizing drawdown, I'm going to come to that question. All right. I didn't forget. So let's see. All right, so this is where that happened. So this is the point where that happened, all right? So we had a daily time frame candle that just sprang all the way down. Okay, now the interesting thing here is this. Because of the way that candle closed, all right, our daily bias is going to be on that candle, all right, because it closed bearish. So our daily bias is going to be bearish. I don't know if you guys understand what I just said. Because this candle closed, the daily candle closed bearish, all right? You remember we're looking for a candle with a very huge impact, all right, or a very huge volume, all right? And we look at the direction that that candle closed. Okay, so that candle closed bullish, bearish rather. So that simply means that what we are looking for on the next day now, all right? The next day, we are looking for sell entries, all right? Now, if I go back to the daily time frame and show you where we are right now, you can see that that 15 minutes candle, I marked it with a black candle or with a black line. Let me take you back to time frame so you can see that that 15 minutes candle still occurred within that same day. All right, you can see that the black candle occurred the exact same way inside that same day that we had the blue candle. All right, so let's quickly go back to the 15 minutes. Hope you guys are with me, please. Please pay good attention, because what I'm about to show you, if you're able to understand it, all right, and apply it, although for those who are going to be getting access to the easy way, it's going to be a lot easier for them, all right? But for those who this is all they are going to get access to, I would advise that you pay very good attention to this. Okay, so we have already gotten to know that that's what the day is going to look like, all right, based on the way the previous day's candle closed. All right, so what are we going to be looking for the very next day? The answer is simple. That very next day, when we come to the market, all right, because we understand that after every high impact move or after every high impulse, all right, price must make a retracement compulsorily. Price has to create a retracement. Okay, so this is one of our other blocks. All right, that's one of our other blocks. This is another one, all right, but this one would not have been so much considered valid, even though it gave us the reaction that we're looking for. All right, so this is our first other block. Okay, let me see. When did that day end? Yeah, that day ended somewhere around here. All right, somewhere around here. So we start the next day expecting or anticipating bearish movement. All right, but we would expect that price will first of all make this retracement. All right, price will definitely first of all make that retracement before we start to go in the actual direction. So what do you simply do? You mark out your other blocks. All right, you simply mark out your other blocks and trade from there. Now, this other block, what minimized the impact of this other block was the fact that this red candle already mitigated it. All right, so price just pushed above it a little bit before dropping. Okay, that's one. Two, you can see that this is the second other block that we marked. All right, price got there and gave us a much clearer, much better movement. All right, then this is another other block based on that same day's movement. All right, that same day. Okay, let me remove this black line. So based on this exact same day, we have this other block. All right. And now if you zoom out, you discover that price reacted from that other block as well. Okay, you can see. And that reaction of price happened the 2 days later. Okay, so what you're simply looking for is what exactly was the strong impact that this candle had. All right, if it was a bullish impact or a bearish impact, you know those those candles we refer to, or we often refer to as imbalanced candles. All right, once you are able to see one on the daily time frame, all you need to do is come to the lower time frames and then use the lower time frames for your entry reason. All right, and if you can do that, you're going to end up trading with a general direction in mind and simply looking for which bus park or which terminal is the closest one to your current location. If you guys understood this, can you please let me know in the comment section that you understood this very well? Please let me know if you understood this. Which is why, let's take this imbalance candle as an example. Let's take this imbalance candle as an example. I'm going to go to the 15 minutes. So who can remind me, what exactly are we looking for in the 15 minutes? It was simply to mark the beginning of that day. Mr. Tokwe, that's what the line is for. Exactly. So we have a daily sentiment that this is a day to sell, right? So what are we looking for? We are waiting for that day to close, all right? And you can see that this is that same day, 6th of March, All right, that's 6th of March. So where is 7th of March? That this is 7th. Yeah, this is 7th. This is 8th. So let's quickly dig into the price action here. Follow me closely. Now, this was where the 6th day ended, all right? Oh, sorry. Okay, it was the 7th of March, all right? And then it ended somewhere around, I think it was somewhere around here, all right? Somewhere around here. So let's mark out our other blocks. First order block, price retraced to fill that imbalance, and what happened next? It dropped, okay? Which now leaves us with this as our next order block. All right, and as you can see, price has not yet tested into this particular order block yet. Okay, so for me, that if I were you, all right, if I were you on AUD USD, this area will be the area where I will be expecting to take a trade from for this coming week. All right, and what kind of trade will I be looking for? Is it a buy trade or a sell trade? Beautiful. So we're simply looking for sell trades, which is why for me, all right, it will be fair to expect AUD USD to try and bounce up a bit, all right, and then after bouncing up a bit, we can now clear the downward movement. Do you guys get what we're talking about here? So generally, you can just search through all of those commodities, all right, all the commodities that you love to trade, search through them, all right, and then get the higher time frame buyers, all right, the daily time frame buyers, and then you can look for entries from the lower time frame, which in this case, I have shown you how to do that with the 15 minutes time frame. All right. Now, remember what I said. I said this is the difficult way. This is the hard way. All right. This is the very, very hard way. Okay. So right now, I'm going to show you guys the easy way. All right. Because the easy way is ridiculously simple. Like ridiculously simple. And I mean that. Because if you can understand the easy way, you realize that a lot of trades that you take and then you say, oh, the news spoiled my trade. The news invalidated my trade. All right. A lot of those situations will not happen to you. All right. A lot of those occurrences will not happen to you. So having said that, let's dig into the easy way for formulating a daily bias. All right. Now, as far as the easy way is concerned, all right, I'm going to be using a tool. All right, it's a custom indicator. All right, it's a custom indicator that tells me or that helps you define what exactly is going on the market. All right, so this is what I'm looking for. You can see that the pitch line has crossed below the orange line. All right, the pitch line has crossed below the orange line, which is in this situation telling me that from this point onwards, all right, AUD USD is in a downtrend. All right, from this point onwards, this point where I marked with the black line. So what do I do in this situation? I can now go to the 1 hour, go to the 15 minutes. All right, and what I'm simply going to do on the 1 hour, on the 15 minutes, is to find my entry reason. All right, where is the closest bus stop to me? All right, let's see. Okay, so that's all I'm going to be looking for. All right, I'm just going to look for a scenario that validates what I'm looking at. All right, so it's either, all right, from that day, it's either I just follow the regular price action on the charts, all right, mark out my other blocks and the likes, or I come back to the 1 hour time frame. All right, there's a system that I use for entries on the 1 hour time frame. all right, which in this case, I'm sure that those of you that follow me would know what that exactly is, all right, and this was a situation where we had that happen. So in this situation, this happens to be our order block. All right, and you see that after the breakout here, price just simply came back for a tiny retest. All right, came back for a retest and then dropped. Immediately afterwards, we got to, this is TP1, TP2, TP3, TP4. All right. Now, after that, what do you notice again? The same thing repeating itself. All right. In this case, this is our other block. All right. This red candle. If you don't know why that is an order block or why that is the order block I'm marking out, then you really should consider, maybe watching some of my past videos. I'm not sure if I've mentioned the reason in any of my YouTube videos, but you can check. I'm pretty certain that I would have mentioned that in at least one or two videos. All right. So what do you see? We had TP1, TP2, TP3, TP4, TP5. All right. Easy peasy lemon squeezy. All right. And then we had you notice that it's the exact same scenario that we're working with. All right. We had a situation here. All right. If we had taken this trade, it would have been the first loss we would have recorded in how many trades that we have taken. There was another situation here. Let me show you that quickly. All right. And then this was our other block. And that became our entry. Let me use the Fibonacci again. So TP1, TP2, TP3, TP4, TP5. All right. And it still kept going. Okay. Let me delete this quickly so that I can show you the next one. Then you discover that in this same in that same vein, all right, we had another situation here. All right. The exact same thing kept playing out again and again. All right, and here you have TP1, TP2, TP3, TP4, TP5. Okay, and then what are we looking for again? The same scenario. All right. Yes, this would have been one of such trades. All right, this would have been one of such trades. This would have been lost. This would have been lost. But immediately afterwards, then we get this very huge one again. Remember, I am not one to promise you 100% accuracy. I am not a ghost, okay? But what I can promise you is 100% consistency, all right? It doesn't mean that 100% of your trades will make profit, but you will have reason to remain in the market. And then this would have been our entry. Let's use the Fibonacci once again, from the top to the bottom. All right, and this would have been TP1, 2, 3, 4, 5. So do you guys see this? So between the two, which one do you think is the easy one? Or which one do you guys prefer between these two? Well, this live stream's recording will not be shared with anybody. I'm not sure it will be shared with anybody. I can't promise, but that's up to the admin to decide. So I know you people want me to come again on the easy one, and the reason is because you all can see that the easy one is actually an incredible approach to trading. We can all see that. All right, it's an incredible approach to trading. However, the reason why I'm not going to be really emphasizing on this easy one, like I told you guys earlier, is because one, this daily bias, this particular approach, all right, is something that I am reserving for just 5 people. All right, just 5 people who are going to be signing up for my mentorship. I have just taken a 2-week break from work. All right, that has been scheduled for, okay, no, it's a 1-week break. 1 week in March, 1 week in April. All right, so I've just taken a 1-week break from work, which is going to be kicking off from Thursday. All right, from Thursday this week, this coming week. All right, from Thursday till Wednesday next week, the upper week. All right, so from 16th, all right, I have taken break from work from 16th till 21st. All right, so that I can have 22nd thereabout. Yeah, 22nd. So that I can have sufficient time, ample time to mentor these guys back to back. All right. For those who miss any sessions, the recording will be sent to them, but the slot is only open for 5 people. Just 5 people. I'm going to show them the breakdown of this daily bias. All right. I'm going to show them every single thing that I factor into it, including risk management, how to program your lot sizes, how to ensure that you don't get caught in a drawdown. And then I'm going to be wrapping up the training with how to apply this particular strategy for trading prop firms. All right. How you can use this strategy to trade prop firms without ever having to sweat. Ever. All right. And at the end of that training, you're going to be getting this custom indicator. I know some people are already trying to guess, oh, what is this custom indicator? You are free to guess. All right. You're free to guess. You're free to, test the waters. All right. It's fine. But all I'm simply going to say is this. There are only going to be 5 people who are going to get the privilege to learn this thing from me firsthand. All right. And it's all going to happen within 1 week, which means that you're not going to be getting so much talk. You're not going to be getting so much uninteresting conversations. All right. It's all going to be straight to the point. And during that period, we are also going to be taking live trades. And for those who are going to be in my signals, who sign up for mentorship, you definitely get access to the signals group for 1 month. All right. It's free for 1 month after you complete your mentorship. All right. So this is the way we are going to be working. 1 week training. I'm going to show you this easy system. All right. Just 1 week. And I can guarantee that by the end of that 1 week, you will definitely be blowing minds with your trading results. All right. You will definitely, I can literally, in fact, let me sweeten the deal a little bit. If you sign up for that 1 week course, all right, or for this 1 week program, all right, and after 1 week, you still feel like you didn't get any value, I am going to refund you ×2 of how much you paid me. And that's a promise. Emmanuel, I think you're on this call. All right. So Emmanuel, please unmute your mic. Let them know that this is not me just talking now. All right. For every single person that signs up for that program, that 1 week program, if they don't get the value that they paid for it, they feel like, oh, it was an absolute waste of time. I'm speaking now as in my capacity as the lead instructor of EasyFX. I am promising them a 200% refund on whatever amount they pay for that mentorship. Does the management agree?
100%. I'm with you on this.
Beautiful. All right. So thank you very much. So guys, you can see that I am not just saying this. All right. The management has agreed to put in on this. So it's just 1 week. All right. And it's not like we're going to have classes every single day. All right. We're just going to be having 3 classes. The first day, we're going to take introductions, other blocks, and all of those things. The second day, I'm going to show you how this works. Then the third day, we're going to start taking live trades. All right. So from the very third day, we're going to start working out live trades. We'll trade the market together, all right? Exchange setups, exchange trade ideas, and all of that. Now, my usual mentorship, one-on-one mentorship, is for a fee of $300. All right, it's for a fee of $300. However, for these 5 people, I'm going to be allowing them pay management. How much should we charge?
Well, I think we spoke on that already, sir, and we considered half of the $300 for this one. So I think I want to get people's response first.
All right.
For people that are interested, all right, I beg for half. All right. What are you guys' opinion also? So for anyone that's interested right now, you are free to speak. All right, I beg for 150. That's half of the original price. So what do you guys think?
All right, Emmanuel. So, well, the floor is open. All right, it's just 5 people. For those who are interested, all right, he has said what he has bargained for, all right, because he knows that this money is not even coming to me. Okay, it's for the company. Now, this is the arrangement. Whatever he has said his own. All right, the company wants me to do this training for $150. Right, that's what the company is proposing.
Yes, sir.
However, for those of you on this call right now, on this meeting right now, if you have a contrary opinion or you have your own ideas, you can simply just type it and then we'll consider your ideas. If it works, we'll work with it. If it doesn't, then we can also repurpose and reconsider. Is that okay?
Definitely, sir.
All right, so we're going to end this session here. All right, it's been a lot of talk. All right, and I'm sure that you guys have learned one thing or the other. All right, but before you go, if you've learned one thing or the other, please and please just drop an emoji in the chat box. All right, just drop an emoji in the group chat. All right, let me know that you guys have gotten some value from this 1 hour that we have spent together so far. All right, so please, 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 let me see your emojis right now. Okay, beautiful, beautiful, beautiful. Well, the indicator I use for the daily buyer as if I wanted to share the name, I would have easily said it. But I'm only going to be sharing that. I'm only going to be sharing that with who are going to sign up for this mentorship program. All right. So they are the only ones that will get access to that indicator. I'm sorry, it's actually an indicator that you can work out yourself. This is see what it looks like. Okay. But so that it will not be abused. All right. It's why I am going to ensure that for those who take the program, I hand it over to them personally with my own settings. All right. So that's that about that. So thank you so much, guys, for taking out your time to join me on this interesting journey. It's been 1 hour together. All right. And I believe that you guys have at least added some knowledge to your knowledge already. All right. So having said that, I want to say a big thank you to you guys and God bless you. Have a fantastic and impressive weekend. And I pray that the Lord will be with you in all of your endeavors. Have a fantastic rest of the evening. Bye-bye.